Hello everyone. Uh, this is Johnson FX. Welcome to my YouTube channel. And today we'll be talking about candlesticks. It's been a while on this channel. I've been working on so many other things with school, busy with school and all that. Well, it is actually very cool and nice to be here back. And firstly, I'll be talking about candlesticks, and we'll be going into some few types of candlesticks that we have. So let's dive into it. So firstly, we'll be talking basically on what candlesticks mean. Let's dive into it. So what is a candlestick? Now, a candlestick is a type of chart that is used in the financial markets. It is like an information that represents the price movement of any asset, be it stock, the currency or commodity. And this type of charting method is actually it was originated in Japan in the 18th century, right? So, and but again, we have some components of candlesticks, and it is said that a candlestick actually possesses 4 main components, right? A candlestick, before a candlestick can be valid, you must say that it possesses four main components, which is the body of candle. And it said that the body of a candlestick is the white part showing the range between the opening and the closing prices. It is usually in green or red or white or black, depending on the setting you put it, right? Most forex traders use the green and red candlesticks, right? So the other component of candlesticks we have is the wick candlestick. Like the wick is actually like a tiny line, right? As seen in this example, it's like a tiny line. It can also be referred to as shadow, right? It can also be referred to as shadow. And most times it is we have 2 wicks in a candle. A candle usually have 2 wicks, that is the high and the low wick, right? You have the upper and the lower wick, that is the top of the lower, which shows the highest price reached during the time period, and the bottom of the lower, which shows the lowest price reached during the time period, right? So we also have the third component a candlestick has is the opening price, right? The opening price at which the asset started trading during the specific period. It is represented by the body of a bearish candle. That is at the bottom of, it is represented by the top of the body of a bearish candle and the bottom of a bullish candle. Do you understand? I'll give the pictorial example and I'll explain it, right? So the closing price represents the closing of a price. That is, it is represented in a bearish candle. It is represented at the in the bearish candle. It is represented at the bottom, right? It is represented at the bottom, and at the bearish candle, it is represented at the top. Now, look at the pictorial example of a candle. This is the wick. This is what the wick is, or the shadow, right? This is the wick or the shadow. This is the body, right? So in a bullish example, in a bullish candlestick, this is the closing price is always at the top and the opening price is always at the bottom. While in a bearish candle, the opening price is always at the top and the closing price is always at the bottom, right? So let's dive into the next. We'll be looking into the types of candlesticks we have. Now, what are the types of candlesticks we have? We have various types of candlestick depending on the size and the market condition, right? We have the doji candlestick. Now, what is a doji candlestick? The doji candlestick is a candle with a very small body where the open price and the closing prices are nearly equal, right? It is mostly an indecision candle. It is an indecision candle where it occurs in the market, right? Where this kind of, look at it, where it occurs in the market, it gives a signal of indecision where there is no decision between the buyers and the sellers. Sometimes the doji candle might actually occur where the market wants to reverse its trend. So that's an example of one of the type of candlestick. Let's go to the next one. The second one we have on our list is the hammer candlestick. Now, the hammer candlestick is with a small body and a longer wick. A very small body and a longer wick, often seen as a bullish reversal signal when it appears in a downtrend, right? It is often seen as a bullish reversal signal when it appears in a downtrend. Now, where you are having a series of lower highs, lower low, when you are like in a downtrend and you see an hammer, something like this, an hammer, sometimes an hammer in a value area, right? Sometimes it represents that the price wants to start changing trend to the upside, right? So these are the types of candlestick. We have the hammer, we have the doji candlestick. Now let's move to the next one on our list. Now we have the shooting star. The shooting star candlesticks is with a small body and a longer wick. It's like the inverse of the hammer, but most of the time it's kind of similar to the hammer, but it is inverse. It is like in a rectangular shape like this, right? So it is typically seen in a bearish reversal signal when it appears in an uptrend. Now, let's say there is an uptrend and you see a shooting star around the value area. It appears that there is a possibility that there might be a shift of trend to the downside, right? So that's for the shooting star. Let's go to the next one on our list. Now we have the engulfing pattern. This candlestick is a very, very popular candlestick. It is a two candlestick pattern. Candlesticks, there are some types of candlestick. If I can break it down, there are some types of candlestick. We have the one candlestick pattern. We have the two type candlestick pattern. We have the three type candlestick pattern, right? Engulfing candle, right, is a two type candlestick pattern where one of the candle engulfs the previous one. The meaning of engulf, that is, it displaces over the previous candle, right? That's for the engulfing pattern, and indicating a potential reversal to the downside, or a potential reversal, or it's indicate a potential reversal to the downside when the bullish engulfing, when the bullish engulfing candle occurs at the end of the downtrend, right? So, and this is a bullish engulfing candle, and the bearish scenario, we are going to look at it. So now the bearish pattern are divided into two. We have the bullish engulfing pattern and we have the bearish engulfing pattern. We'll go into it later on the video. Now, this is the bullish engulfing pattern. As I earlier said before, it is a two candlestick pattern where the small bearish one, that is the red one, you can see it in the picture here. The small bearish candle, that is the red candle, is followed by the larger bullish candle. This is the larger bullish candle, and completely engulfs below the previous one. It completely engulfs below the previous one. It completely engulfs above the previous candle. right? So this pattern suggests a potential reversal to the uptrend. It suggests a potential reversal to the uptrend, right? So let's go to the bearish engulfing pattern. Now, the bearish engulfing pattern, as I earlier established that I will also go into it. So the bearish engulfing pattern is a 2 candlestick pattern, right? Where the bullish, where there is a small bullish candlestick, which is followed by the larger bullish candlestick, and it completely engulfs over the previous candle. This is what happened here. It is a small green candle, that is a bullish candle, and there is a larger bearish candle. It completely engulfs above the bullish candle, and this signifies that there is a potential reversal to the downside. Now we have a scenario here. Maybe the market is trending to the upside, and in a value area you have a bearish engulfing pattern, right? You have a bearish engulfing pattern. You have a bearish engulfing pattern at this type of area, right? Let's say this is the red candle and this is the green candle. Let's say this is the green candle, right, at this area, right? And you can see this is a bearish engulfing pattern, and in this area it signifies that the market is about to start trending to the downside. It signifies that the market is about to start trending to the downside. It gives like you can add it to your confluence in trading. It gives an added confirmation that the market is about to start trending to the downside, right? So let's go to the next one on our list. Now, the other type of candlestick we have is tweezer tops and tweezer bottom. Tweezer tops and tweezer bottom. Now, this is a very, very type of unique candlestick pattern. It is a reversal pattern where 2 candlesticks which almost have identical highs or identical lows, right? And it is a type of candlestick that signifies that there is a reversal of the current trend. Now, you can see in this scenario, you can see in this pictorial representation that this tweezer bottom, this is a tweezer bottom, this is a tweezer bottom. We have a tweezer bottom and tweezer top, right? So this is a tweezer bottom. You can see it is of 2 identical highs and 2 identical candles, right? They're very identical, but the color are of different. The colors are just different, right? So you can see this area now. You can see this area. The tweezer bottom. It actually occurs at the bottom of a downtrend, which actually signifies that there might be a current reversal to the upside, right? Same thing applies to the tweezer tops, where you see this kind of pattern in a value area. Then you might see that the markets might change its trend by reversing to the downside. Now let's go to the next one on our lists. We have the morning star. The morning star is like a three candlestick pattern. You know, I earlier established that we have 3 types of candlestick. We have the forms of candlestick. We have the one candlestick pattern. We have the 2 type candlestick pattern. We have the 3 candlestick pattern. Now the morning star is part of the 3 type candlestick pattern, right? So now let's read the theory here. It is a 3 type candlestick pattern that signifies a potential bullish signal. It starts with a long bearish candle followed by a small bodied candle, which could be bullish or bearish, right? And it ends with a long bullish candle that closes well into the first candle. Now look at this scenario that happened. If you read this theory here, you will see the pictorial representation as it is stated here, right? So the morning star is a 3 type candlestick, right? It is formed by a long bearish candle followed suit by a small bodied candle. It can be red, it can be bullish or bearish, and it can be a bullish or bearish candle. It depends, right? And it is followed suit by a bullish candle, right? a bullish candle, and that bullish candle closes well into the first candle. It closes the body of the first candle, and that is what actually happened here. And it is a reversal pattern that actually occurs when you are in a downtrend. It actually occurs where the market is about to shift to the upside, right? So let's go to the next one. Now we have the inverted hammer. So similar to the hammer we actually discussed, the inverted hammer is right? The inverted hammer is has a long upper wick, right, and a small body at the end. So you can see it here, and it actually signifies that there is a potential bullish reversal when it appears in the downtrend. Now, when you see something like this in the downtrend and you see an inverted hammer in a downtrend, right? And you see an inverted hammer in a downtrend in a value area, it signifies that there is a potential reversal to the upside, right? So let's go to the next one we have on our list. Is there any next one? Yeah, we have the evening star. Just like the morning star, we have the evening star, right? We have the evening star, and this is a three candlestick pattern also. The evening star and the morning star are three candlestick pattern. Now look at this scenario. The evening star actually occurs where there is a potential bearish reversal, right? Where there is a potential bearish reversal. So you have the evening star, right? It actually signifies that the market wants to start trending to the downside. Now look at this pictorial representation. You can see the market is making series of high highs and higher lows. Now you can see this evening star. Look at this. This is the first bullish candle, followed suit by another smaller bullish candle, and it's completely almost closed the former bullish candle, right? And this is a signal that it is actually changing trend to the downside, right? And in conclusion, we could say that the candlestick charts are widely used by traders, right, and analysts, because they provide a visual representation of market psychology and helping to forecast future prices. Now, it should be noted that, right? It should be noted that candlestick is very, very important as traders. You must be able to read or to know candlesticks in order to be a very, very good trader, right? And this is where I'll end this note. If you are just viewing this channel for the first time, please do well to subscribe to this channel and click the thumbs up button, and also comment and tell me what you think about this video. Thank you.